Right, good afternoon and welcome to this live webinar about portfolio management and analysis with ShareScope. My name is Richard Chiesa and I'm the Head of Knowledge here at Ionic Information. So if we get started, I'm going to be using ShareScope Gold to explain all the concepts today. Everything I explain here will can also be done in ShareScope Plus and ShareScope Pro. The portfolio management system is basically the same, except that with ShareScope Plus and Pro you can calculate valuations on an intraday basis, but the features are very similar. So we'll start off with actually creating a portfolio. It's probably those of you that are watching have already done this, but we'll go through the basics anyway. So to create a portfolio, you should find a Select Portfolio button on your toolbar at the top, and there will and you can just click on it to open up the dialog box. If alternatively, you can just hit the F12 key on your keyboard and the dialog box will open up. We want to create a new portfolio, so we'll press the button here and we'll give it a name. I'll call that my ISA. The option below is for currency. This is it will always default to British pounds, but you can pick any other currency. This is a currency for the total of your portfolio. It means that you can record transactions in any currency you want, so you could and you can mix and match if you ever wanted to. You could record you could take a dollar denominated stock and record the purchase in pounds and the sale in euros and all the dividends in Japanese yen, and ShareScope will convert everything using the exchange rates at the various dates of the transactions, and it'll convert everything to the portfolio currency, so British pounds in this case. And if we tick this option, it will automatically create a cash account called My ISA and attach it to the portfolio. We're going to do this because we will want to keep track of our cash as well. And this last option, if you want to have a shortcut added to your toolbar that will immediately open this portfolio, you can tick the Add Toolbar button. If you don't, you can just uncheck this option. We'll leave it on and we'll click on OK. And here's a new cash account. It will default to My ISA and it's going to be attached to the My ISA portfolio. So we'll click on OK. And here is our new portfolio, blank portfolio. And as you can see on the bottom here, there's a My ISA button that's been added to the toolbar. Now, adding shares to the portfolio, there are two different ways in which you can do this. You can either go to a list and select a share that you wish to add to the portfolio, and either press Ctrl A on your keyboard or right click and go to Add Selected Share to Portfolio My ISA. ShareScope will always offer to add shares to the currently active portfolio, and the active portfolio is simply just the last portfolio that you were looking at. So click on that and the portfolio, the share has now been added to the portfolio. If we open the portfolio again, here it is. Another way of adding a share to the portfolio, if you already know what share you want to add, is by right-clicking on the main portfolio screen and selecting Add a Share to Portfolio. If you do it here, or pressing Ctrl A as well, it'll open up a search box and you can just search for any instrument within the program. So we'll do CLS Holdings and we will then click on OK. That will add the shares to a portfolio. Now, because I'm going to go through certain examples of splits and consolidations and rights issues and takeovers, I want to add a historical share to my portfolio as well. Virgin Money to be specific. Now, if I were to press Ctrl A and search for Virgin Money, I am not going to find the actual share. The only thing I will find is a couple of funds here. In order to find dead shares, so shares or funds, anything that has been delisted, if you go to the View menu, you can tick the option that says Show Historical Shares. And now if I search for oh, press the wrong button there, sorry. Virgin Money, I will now find Virgin Money Holdings UK PLC, which I am going to need then for a transaction example. So this is a useful tip to remember, especially if you've just started using ShareScope or haven't been using it for a long time, and you'd like to record the history of your portfolio, including shares that you used to own that are no longer listed on the stock market. As a policy, we never delete shares if they delist. They still remain in the database, so you can still add them to portfolios and record transactions. Obviously, the rest of the information no longer exists because the company is no longer on the market. So I'm going to start with recording some transactions, and for each share that I'm going to add, there will be a sort of special case. So one of the special cases is going to be share splits. So that's why I picked CLS Holdings. CLS Holdings had a split a couple of years ago. So let's start from the beginning. We want to record a purchase. We select a share, we right click, and you'll find a buy option. We click on buy, box opens up, and we can enter the details of our transaction. So I want to buy 300 shares, and I want to buy them on the 15th of June. 15th of June 2017. Sorry, wrong date. 2016 for my purchase, and this was before the split because I actually paid £15.60 for these shares. You can enter a broker charge as well, stamp duty as well, contract levy if relevant. I'll click on OK. And here is my transaction screen with my transaction. So I bought 300 shares, and they cost me £4,691, and I'm currently making a £4,000 loss. Now that's not a real loss. The reason why I can see this loss is that I haven't yet recorded the split. Now recording a split is very easy. You right click on the share, and you go to other transaction, and you'll find share split. So this happened on the 8th of May 2017, and it was a 10-for-1 split. So here you can either enter the previous number, which will happen automatically, and the new number, which was 3,000, or you can enter the old number and type in the ratio, and you do it either way, it will work either way. So now I click on OK, and my shares have been split from 300 to 3,000, and I am now showing the correct value and the correct profit on my transaction. Now you'll have noticed that currently the cash balance from the cash account, my ISA, is negative. Now this is because we never went and recorded a initial cash credit, a cash position. So we can do that retroactively, that's not a problem. And to access the cash account, you can simply right click in the middle of the screen and go down to View Cash Account, and you'll actually find an option called Attached Cash Account. So it'll automatically go to whichever cash account you've attached to the portfolio. So we'll click on it. And in this cash account, this works just like a bank statement. You will have the sorted by date, all the credits and all the debits that have come into your account. Now, of course, there's only one purchase that we've recorded, so there's only one debit. Obviously, that means that our cash balance here is minus £4,691. So if I right click anywhere on the screen, I can add a credit, and I'm going to add this credit before the date of the earliest transaction that I intend to record. So I put this as a 26th of March 2016, and I enter a credit of £100,000. Click on OK, and now there we go. I can start it with the oldest at the top, or double click here on date to change the order. So I have my credit balance of £100,000, and then I have my debit of 4,000, and now my balance is 95,309. Now if I go back to the transaction screen of my portfolio, now here is another trick. If you want to very quickly, no matter what screen you're on, you want to quickly jump back to the transaction screen of the active portfolio, you can do that by simply hitting the plus key on your keyboard. If you hit the plus key, it doesn't matter what screen you're on. You could be on a new screen, a list screen, an alarm screen. Hit plus, it will automatically jump to the transaction screen. And so here we are, back to our portfolio. Now, you'll have noticed here there's a little summary at the top, and the first item here is value, and there are two value items. The first is the value of the portfolio, including the cash balance, and the second is the value of the portfolio excluding the cash balance. So if we take the cash, which is £95,000, plus the £6,000 of shares, I have then £101,000 and just £6,000 if I just include the shares. This is the change in the value of my portfolio compared to yesterday. This is as a percentage, and this is the profit that I am currently making, and this is a realized profit, which is 0. Now, realized profit is profit that I have actually pocketed, either by selling shares or receiving dividends. At the moment, all my profit is potential profit, so that £1,954 could be lost at any moment. So, my realized profit is 0, and my total profit is 1954. And the last item is just simply the total charges. So this is how much I have spent in charges. Talking about charges, I've set my broker charges to £11. However, there is an extra option that you can activate in ShareScope. If you go to Tools and you go to Options, if you go to the then Portfolios and Transactions tab, right at the bottom here, there is a tick box that you can tick and assume transaction stamp duty at whatever percentage. If we tick it, it will default to 0.5%. This will automatically calculate and add the stamp duty to your transaction, so you don't have to sit down and calculate it yourself. It'll automatically add 0.5% on the cost of your shares. So let's tick that, and then we'll see with the next purchase how that works. Now, the next transaction, transaction type I wanted to show you was the takeover. Now, we get questions like this quite often because they are normally takeovers of things that are a little bit more complicated to manage correctly in your portfolio. Now, it's not very complicated as long as you know what to do. So let's set up our example. Let's go back to the main portfolio screen where we just have our list of shares, And just as I can hit the plus key to open up the transaction screen of a portfolio, if I hit the minus key on my portfolio, it will go to the main portfolio screen. And the main portfolio screen is nothing more than just the list of shares that I've added to the portfolio. So we'll start off with recording the original purchase of Virgin Money, which is now dead. So I'll record a buy. And I will record a buy for 1,600 shares at £3.118. And as you can see, stamp duty has now been automatically calculated for me. I'll add my £11 broker charge. If you pay more, I'm sorry for you. If you pay less, well, good. And we'll set our date to 25th of January 2016. You will have noticed there is a time as well that you can set for the transaction. The time is mostly irrelevant unless you have multiple transactions on the same date. If you do, then ShareScope will use the timestamp to sort to know in which order the transactions occurred. If you don't have multiple transactions on the same date, then whatever time you've got recorded there doesn't really matter. But do bear that in mind. So we'll click on OK, and here is our purchase of Virgin Money. So we have the buy transaction and then just the total. I've just noticed that the table that I'm using here doesn't actually have a transaction type. So I'm going to take a little aside to show you how you can add extra information to your transaction screen. There's all sorts of columns, and we'll go through go through them with a bit more detail a little later. But if you want to add a column to a portfolio, you just right-click on the column heading, and we'll go to Add Transaction and select Transaction Type. And there we go. Now we have a transaction type. Right, so now we can actually tell what each of the transactions are. Latest line, which is the one in bold, that's just the summary for that particular share. So we've got our purchase of Virgin Money. Now, Virgin Money was, go back to the portfolio screen and actually add the share that took over Virgin Money, is CYBG. We'll add it to our portfolio because we'll need this later. Now, Virgin Money was taken over, and it when the takeover occurred, holders of Virgin Money shares got given 1.2125 CYBG shares for each Virgin Money share that they held. There was no cash involved or anything like that. It was just a straight up exchange of shares. Now, how do we do this? The best way of doing this is to get rid of the Virgin Money shares without deleting the transaction. We don't want to delete the transactions. If not, we would lose the record of it, and it will mess with the analysis that you might want to do. But also, we don't want to straight up sell them because there was no actual exchange of money. So we are going to use a sell transaction, but we're going to sell the shares at cost. So if we right-click on Virgin Money and select sell, we are going to sell the shares, and we're going to sell them on the date that the takeover occurred. So that was the 15th of October 2018. And there is and it's going to be for the cost of the shares. So what we want to do here is we want to, yes, record a sell, but we don't want to record any profit or any loss from this sell, because if not, again, it will alter the value of the portfolio. So what we need to do is we need to look at what the cost of the original shares was, and we just type it in here. and that's going to then include everything, so charges and everything. We just want to record a transaction that will lead to a profit of exactly 0. Now, another thing that you want to do is to remove this transaction from the cash account. Because this isn't a real sell, no money was exchanged for this, we want to set the cash account from my ISA to none. And if we do this, we have now liquidated our Virgin Money holdings for a profit of exactly 0. Now the next step is to use that same amount of money to record a purchase in CYBG shares. So we'll go back to the main portfolio, we'll find our CYBG, we right click and we select buy. Now the number of shares that we're going to buy, that's just the number of shares that was given to us within the takeover deal. So that adds up to 1,940 shares. Now the price of a purchase, that is going to be stamp duty to 0, and a total cost which will be equal to the disposal of the Virgin Money shares. So it will be 24.74. And price per share gets calculated automatically by ShareScope. Again, no real money was involved because this isn't an actual real purchase. So we set the cash account to none because there was no change in money. And again, we set the date to the same date as the Virgin Money disposal. We'll do that and we will click on OK. What we're doing here essentially is we are transferring the cost of the original Virgin Money shares to the CYBG shares. So any profit or loss that was being made with Virgin Money would ostensibly be then transferred to the CYBG shares. And that is it. You might need to do a bit more calculations to find out what the total cost of the shares that you held if you had multiple purchases and maybe some partial sells. ShareScope will then give you the total book cost of the shares. So if we go to add a transaction column, we can add a book cost. Oh, well, I should go total book cost, and we'll know then how much the shares originally cost us then. And you can use that number to record the sell of a company being taken over, and then that exact same amount of money to record the purchase of CYBG shares. So it's as if you had always purchased the CYBG shares. And then, of course, you can go along and you can keep the shares, or you can sell the shares, depending on exactly what happened. I'm going to record the sell, and this is going to be just a normal sell. This is actually us selling off the CYBG shares. So we'll sell them, and I'll record the sell in March 2019. And sold them for £2 each, and with an £11 broker charge. Click on OK, and here we have it. So we have we're recording it. So we sold the shares, sold it at a loss, and we made now a loss of £155.74. And if you can see, our realized profit here at the top is now reflecting then that loss that we've actually then made. Before I move on, do you have any questions about about how to handle takeovers. I hope I've been as clear as possible. But if there's anything that I've missed or you haven't understood, please just type away in the chat, and I'll answer the question. One thing that I forgot to mention is that often with these types of takeovers, there is not only shares but also some money involved. Sometimes you will receive shares in the company that took over the original company, plus some form of return or capital. If that's the case, you can record it against the new company using the other return transaction. So again, we'll select CYBG, we right click, and under other transaction we will find an option called other return. Now, other return is a general purpose transaction which you can use to record any cash return that you received from your investment that wasn't strictly a dividend. So if, say, we received then say 1.2125 shares of CYBG for every share that we owned, plus 5 pence in cash, for example. Well, in that case, we'll put the number of Virgin Money shares that we had, and we received 5 pence. And again, we'll put that on the date of the takeover. Now, this didn't really happen. There was no cash involved, but in our example, we received, in a hypothetical scenario, we received also 5 pence per share. So we'll click on OK, and we'll have the other return added as one of the transactions. Now, the other return is cash that we received, so it's money, and that will get added then to the total profit and loss. So there was the minus £1,555 for the sale of the actual shares, but then the £80 added on top of that, so our total profit was minus £1,075 for CYBG. The next type of transaction and how to handle it that I want to talk about was rights issues, and I was looking up and I found that Marks and Spencer's is actually currently in the middle of a rights issue. So I'm going to hit the minus key, go back to the main portfolio screen. I'll press Control A to add, and I will search for MKS, and it will find Marks and Spencer's. And I'll click on OK, and Marks and Spencer's in my portfolio. So I will record another hypothetical purchase that I made in Marks and Spencer shares, and I will have recorded a purchase of 4,000 shares at £3.13 plus my standard £11 broker charge, and that would have been on the 15th of August 2017. Click on OK, and here's my Marks and Spencer's transaction. This portfolio isn't looking very great, very good at the moment. There's a couple of large losses there. So Marks and Spencer's did a rights issue on the 29th of May. So on the 29th of May, any shareholder in Marks and Spencer would have received one right for every 5 shares that they held. So in our case, that 4,000 shares would have equated to 800 rights. Now, when you receive those rights, you have a choice to either take up the rights and purchase more Marks and Spencer shares at a discounted price, or you can decide to sell the rights, and you normally have a couple of weeks to do so. When you receive those rights are traded on the open market, so you might want to keep track of a value while you decide if to take them up or to sell them. So in ShareScope, we carry the rights just as any other instrument. So if we go back to our main portfolio and press Control A, we could find the nil paid rights. Finding nil paid rights, if you're not too sure, is quite easy. The way that they are listed on the London Stock Exchange is with a EPIC code, which is the same as the company's EPIC code plus the letter N added on top. So MKS is Marks and Spencer's, MKSN is the other rights, the nil paid rights of Marks and Spencer's. So click on OK. And now we also have the nil paid rights. These look similar because they're under the same name. If to avoid confusion, you can actually add a type column. So if you right click on a column heading, add general column, and you will find type. And there you go. That way you can actually tell which one is which. So if we receive these rights and we receive them on the 29th, we didn't pay anything for them. So you can simply record a purchase. And again, it's a non-cash purchase. Won't really matter because the total will be 0. We'll record the rights that we received. It's 800, but we paid nothing for them. There we go. And we received them on the 29th of May. Sorry about that. 2019. Click on OK. And this way we can keep track of the value of our rights. We hold them. We haven't yet decided if to buy them, or to take them up or to sell them. So at the moment we have £288 worth of rights in our portfolio. Now, when we decide what to do with the rights, now we'll have to decide soon because I think, if I seem to remember correctly, the offer ends tomorrow. We have a choice. So I'm going to go through both cases. So first one is we decide to take up the rights. So we decide to invest more money in Marks and Spencer's to purchase some extra shares at a discounted rate. So take up the rights. We select the main Marks and Spencer share, not the rights. So we right click and we go to other transaction and we'll find a take up rights transaction. We'll click on it and we can now enter the number of shares. That's 800 at the cost was £1.85. So there we go. That's our discounted rate. And that will go through tomorrow if I remember correctly. So we'll record this in the future. Is this okay? Yes, it's fine. If you accidentally record a transaction in the future, ShareScope will warn you to make sure that it was what you wanted to do. We're just anticipating what's going to happen because we know it's going to happen then tomorrow. And here we have it. So we have now recorded our taking up of the rights. We now have 4,800 shares in our portfolio. Now, after we've done this, obviously we no longer own the rights. We only recorded the purchase of the rights simply so we can keep track of their value while we hold them. We no longer hold them. We didn't sell them. So here you can just simply delete the transaction. And delete a transaction, you just select it and hit delete on your keyboard. We no longer want to keep track of the rights because we took them up. If we sold them, now I'm going to delete this rights transaction because now I'm going to show you if we decided to sell the rights. Now, say we decide to sell them yesterday, we will go to other transaction and we'll select sell nil paid rights. we're going to sell our 800 rights at the market price yesterday, which was 36 pence per share. And I've never actually had to do it. I don't know if there was if there would be a broker charge involved. I guess there might be. So I'm going to actually add then the broker charge. That we're going to pretend this happened yesterday. So we click on OK, and now we have a sell NPR transaction type. This now here it doesn't alter the number of shares that we held, so we're still going to have our 4,000 shares, but obviously we received £277 from our purchase, from our sale, sorry, and that will be added then to the total profit of for Marks and Spencer's and the total profit on our portfolio. So yeah, it's in ShareScope. It's quite simple what to do once you decide, once you know what to do. The next part that I wanted to look at is actually going into how ShareScope calculates the profits and for the portfolios. So to do this, we are going to have to record something a little bit more complex than simple purchases and sales. Right, so that's why I did BHP group. So I'm going to go through and record a few purchases and a few sales of BHP shares, and I'm going to try and do this as quickly as I can. So to okay, fantastic. So we have I've now recorded a number of buys and sells. Now ShareScope, the way that ShareScope calculates your the profit of your transactions is on a first in, first out basis. Now this isn't the way that profits are calculated for tax purposes, and in fact the capital gains tax tool in ShareScope will use the pooled method then to calculate the various costs. However, as most users have of ShareScope, you have their portfolio in a non-taxable, so in a non-taxable portfolio, we tend to calculate profit in the way that is mostly considered the most intuitive way, which is on a first in, first out basis. So the way it works is simply that the first shares to have been purchased are the first shares to have been sold. To illustrate, let's have a look at the details. Now I'm going to add a couple of extra transaction types, so extra column types to this table. If I go to add a transaction column, I'm going to add a realized profit loss and an unrealized profit loss column to our table. So in the beginning we bought 2,500 shares, and the next transaction we made is that we sold 1,500. So we were left with just 1,000 shares after this transaction. Now the profit on this sale, that is easily calculated. That is simply the difference between the between the value of the sale and the cost of those 1,500 shares, and that is easily calculated from the purchase. Then there were an extra 2 purchases, one for 2,500 and one for an extra 1,000. And we can actually add a actually we do have the total shares column. Here it is. We'll move it together. This is the number of shares involved in the transaction, and this is the running total number of shares. So after the third purchase of 1,000 shares, we now have 4,500 of them. When it then came to sell these 3,000 shares, the profit that was calculated for this sale was calculated on the cost starting from the top and going downwards. Now, if we remember, we now have 1,000 shares remaining from the first purchase. So to calculate the sale of, calculate the cost of the shares sold here, the cost would have been 1,000 shares purchased at this cost, so for the first transaction. Then we sold the 2,500 shares from the second purchase, and then another 500 from sorry, my mistake. Sorry, there were 1,000 shares from the remaining from the first purchase, and then we sold 2,000 of the 2,500 for the second purchase. So ShareScope will include all of the remaining shares from the first transaction, and then these to calculate the cost. So it's first in, first out. These shares, once purchased in the third purchase, those are not being included in the calculation of the profit because we still have some shares left from the second purchase. So these will not be sold until these shares here are sold in full. And that's how first in, first out calculation happens. Now, you don't have to worry too much about it because, again, ShareScope does it all for you, of course, but a lot of people are quite interested in exactly how we arrive at these figures here. Now, another thing that I have not talked about yet is dividends. Now, ShareScope does have a dividend database and has a automatic dividend recording system. This is quite useful if you are building your portfolio retroactively. So you started up using ShareScope and you want to record the last 3-4 years worth of transactions. You don't have to worry about the dividends paid out by various companies that you own or have owned in the past. All you need to do is record the purchases and sales that you've made, and ShareScope will then be able to tell which dividends you are entitled to and how much they paid out. So first, you set up all your portfolio. Now that we have, we can go and record all of the dividends. And to do that, we simply right-click anywhere in the middle of portfolio, and we go to Show Latest Dividends, and a window will open up. And ShareScope will run this through all of your portfolios in one go. So if you've created multiple portfolios, you will see here under the portfolio column several different portfolios. And here it lists all the dividends that are about to be added to your portfolio. It will list what the ex-dividend and payment date was, a company, type of dividends, and the total amount as well. If by any chance you need to modify that dividend, sometimes you might need to slightly tweak it, especially if you were getting a dividend in a foreign currency and the exchange rate wasn't the one that ShareScope has pulled up. ShareScope will try to do conversions, but it will obviously use the exchange rate on the day. And the way it works, it will use the close the exchange rate as at the close of that day, which might not necessarily be the exchange rate that you actually got. So you can tweak the numbers here if needed. Don't have to worry about here because they're all British pounds. If for whatever reason you don't want a particular dividend to be recorded, you can just remove a tick and that dividend is not going to be added. When we click on OK, all the dividends are now or have been automatically added to our portfolio. Now, from now on, ShareScope will automatically offer to add dividends to your portfolio whenever they're paid. So that dialog box that we just looked at, it will appear the next time you start up ShareScope. The dialog box will pop open if any dividends were paid out since the last time that you used the program. Pop-up will appear and it will list all the dividends that were paid out since the last time you used ShareScope. And again, you can go through them, click on OK, and those dividends get automatically added to all the relevant portfolios. So that is, again, pretty straightforward. So rather than use a cash account, I have used imported data with a title of funds to invest. Yes, some people do that. They create a virtual share within the program. They give it an arbitrary value of £1 and then record purchases and sales against this cash share. The problem with doing that, of course, is that it doesn't, that the amount of cash that you record that way doesn't automatically change whenever you record a purchase, a sale, a dividend. Using a cash account, this happens automatically. If we go back to the cash account that we created earlier, and we'll find that every transaction that we recorded has now automatically been added to the portfolio. So it is there we go. And actually, I think I got the wrong date here because I'm going to change the date of the original credit. There we go. So at least the original credit happened before the very first purchase, so we don't have a negative balance. But see, this way you can have then a running total of your cash balance. There's no real problem in doing it the way you're doing and creating this fake share and recording purchase and sales. But you're doing extra work for something that ShareScope will do for you then. The ShareScope, you can look at money in, money out on the cash account screen, and there is a total cash here on your portfolio at the end of your portfolio for the cash that you've added. So you can always check on the running total for your cash account. So Richard, you're asking, is that first in, first out calculation how a real portfolio would operate? Well, there is no correct answer in the way there have been books and books being written about portfolio theory and how things should be how profits should be calculated and taken into account. If you're doing calculations for tax purposes, then there is one way in which you should calculate it, and if you do it any other way, it's wrong because you'll be incorrectly calculating your taxes. And that method, which is a pooled method, which is the method that sort of HMRC uses, we have that integrated in the capital gains tax calculator. If you right-click, go to capital gains, and you can call up the actual capital gains tax report with all the intermediate calculations. However, that's not the only method. You could calculate profits on a first in, last out method, which would essentially be just the opposite of what I was explaining, where these shares here would be the last ones to be sold. So in the case of this sale here, it would calculate it will calculate the cost first by looking at the cost of these 1,000 shares, then at the cost of 2,000 out of these 2,500 shares in order to calculate the cost of this sell. It's a perfectly valid and perfectly legitimate method of doing it. It's, though, not the way that people intuitively calculate their profit. That's why we decided to go with this methodology. It's simply the most intuitive. We had a different method a very, very long time ago, but we did notice that it was very confusing for people, and they were doing the manual calculations and coming up with different profit figures for the individual sales, and we kept constantly asking why. So we then decided, no, we should do first in, first out, because it's the most intuitive. And when you're not dealing with tax, it doesn't really matter, because you're not being taxed on individual cells. You're just keeping track of how well your portfolio is doing, and in any case, if you then end up liquidating your entire holdings, the total amount would remain the same. This is just for intermediate calculations. Should you do anything differently if I take my dividends in cash? No, this is the dividends paid out in cash. If you get your dividends paid out in shares, that's different, and I am going to show you how that gets recorded. So these dividends, this is just a cash amount. It doesn't alter the number of shares held. It simply then records the it simply records the total amount of cash that you received, and in fact it then adds it to the total profit. There's a realized profit loss. In fact, this is the total amount that you've actually pocketed from selling shares or receiving dividends, and that's 29,000. This can never change. It can, or at least this total can change, obviously, for further transactions, but these numbers here can never change because these are completed transactions. If you do receive your dividends in shares instead, there is a transaction type that you can use, and that is the scrip dividend transaction. If you again select the share, right click, if you go to other transaction, you will find there is a scrip dividend. You click on that, and you can enter the number of shares that you received in lieu of dividends and how much those shares cost you. Now, of course, these can't be recorded automatically by ShareScope because ShareScope, because the price that the shares are going to be charged at is only decided later on. ShareScope has no way of knowing how many shares you will be able to receive for any given dividend payout. So if you look at your broker report, you'll be able to see that. You just enter the number of shares, how much they cost, and the date of the payout, and that will add this number of shares to the total of your portfolio. Now, I added these columns and I didn't really explain. I do recommend you add these 3 columns because these will show you the 3 types of profit that your holdings are making. CLS is a good example because we still own some of the shares. Actually, we still own most of the shares. Realized profit, as I said, that's a total amount of money that you've pocketed from selling shares or receiving dividends. In the case of CLS, it's only dividends, but we've got all the dividends add up for a total of 397.5. And that's money that we've pocketed. It's now received. It's ended. Unrealized profit. This is the profit that you would make if you were to liquidate your entire holding at the latest price. So if we were to sell all of our CLS holding shares, we would make £1,954 in profit. This number, of course, can go up and down as the share price goes up and down. Total, the column that's simply called profit and loss, is nothing more than just the sum of these two numbers. So this is everything. This is money that we've made and money that we could potentially make by selling then the shares. And in fact, you will have then at the bottom the totals. Now, depending on when you started using ShareScope, we have changed the default options. You might not have these two options activated, where you can see the total and see the cash account at the bottom of your portfolio. If you don't, right click on the transaction screen and go to List Design. If you go to the Other tab, you can simply set the totals line to appear, and if you had it set to hide, it won't show it, but you can show the totals line either at the top or at the bottom of your portfolio. You can then tick the show summary lines for linked cash accounts. If that's ticked, it'll add the cash account line. If you're using ShareScope Plus or ShareScope Pro, you'll also find an option here where you can turn on the intraday value calculation. If you tick that, instead of saying value here or profit here, it will say intra value or intra profit, meaning that the value and the profit is being calculated intraday, so either with a 15-minute delay or live, depending if you're using ShareScope Plus and ShareScope Pro. And in case you're wondering, ShareScope will use the bid price to calculate the value of your portfolio while the market is open. If you're looking at it either in ShareScope Gold, or if you're looking at it during a weekend after the market is closed, ShareScope will value your portfolio using the latest close price of the share. The next column here that we've got, we have a return and an annualized return. The return is just a percentage return based upon the amount of money invested. And if we remove this column, we can add actual total return, realized return, and unrealized return. These three columns, total return, realized return, and unrealized return, are simply the percentage values of these figures here. So we can see that the total return of CLS is 50.1%. That's because we invested £4,691 and we made almost exactly half of that in profit. 8.5%, that's the of realized return, because again we've made £397 in profit from a £4,691 cost. And then we unrealized profit or loss in the unrealized return is 41.7%. And this number here is annual return. This is the annualized return. So this is based upon how long we've had the shares, and the so it calculates it then on an annualized basis. So it was a return of 18% per year. Now the annualized return specifically can sometimes show some very wacky numbers, because especially if you've made a purchase yesterday and the share price happened to go up by 1% from your purchase price, so you're making 1% over 1 day. 1% over 1 day annualized is a gigantic amount of money, and so you'll see the annualized return of like maybe 150,000%. That and the same thing as well if you're annualizing the 0.5% loss over 1 day. That again will give you an annualized return of probably minus 99.99%. That is, that's just, so is the nature of annualized calculations when you're trying to essentially project what's already happened then into the future. There was now before I'm going to take a few questions. If you haven't, there's one last thing that I wanted to show you with the portfolio, and that is the graphing side. If you want to look at what your portfolio is worth and how the value is changing over time, you can right click and you can see there's a graph value profit, and if you select graph value, it will open up a chart showing you the change in value of your portfolio over time. I'm now double clicked, so I'm showing the entire history of my portfolio, and it will start obviously from the initial £100,000 that we deposited in cash, and we can then see the value of a portfolio changing over time. This graph is why it is fairly important to actually have a corresponding cash account. This graph includes the cash balance as well. If you didn't have a cash account attached to the portfolio, every time you bought a share, the value of the portfolio would jump up, and every time you sold a share, it would jump down because there would be no corresponding credit and debit. So it would make the graphing the value of the portfolio quite not very useful. With a cash account, on the other hand, here you're actually showing the total amount of you can actually see how your investments are doing. If you right click on the graph, you'll see a return to parent list option, and that will return back to your transaction screen. If you go right click and go to value / profit, you can do graph profits, and this instead is a graph of the total profit figure. So total profit figure of around £28,000, and we can see this how the profit changed over time. Thank you very much for tuning in this afternoon, and if you then have some questions that you can think of later, please give us a call or send us an email. We are always here to help. So yeah, thank you very much for tuning in today, and goodbye.